Welcome to our podcast, diving into the world of cryptocurrencies with a focus on Bitcoin versus Ethereum. Bitcoin, as you know, is like digital gold, scarce and durable, while Ethereum is more like a decentralized computer powering countless applications.
Absolutely. It's fascinating how these two giants shape the crypto space. So, let's start with Bitcoin. What really sets it apart?
Well, Bitcoin was the very first cryptocurrency, created back in 2009 by the elusive Satoshi Nakamoto. It's engineered to be a store of value and a medium of exchange. Think of it as a digital asset underpinned by a blockchain that's public and immutable. Its
Right.
most notable trait is its scarcity. There's a fixed supply of 21 million coins, which plays a huge role in its valuation.
I get that. And since Bitcoin utilizes proof of work with SHA-256, the network is secured by miners solving complex problems, making it tamper resistant.
Exactly. That proof of work mechanism, while robust, also means that Bitcoin transactions are confirmed roughly every 10 minutes. It's like the network has its pace, which is part of why transaction fees can fluctuate during periods of high demand.
Yep, agreed. Now, shifting gears to Ethereum, its identity is kind of different, isn't it?
Oh, definitely. Ethereum was designed as more than just a currency. It's a decentralized platform for building applications, smart contracts, decentralized apps, or dApps as we call them. Its native token, Ether, isn't just a coin to hold value,
Yeah, exactly.
but it fuels interactions on the network.
And its founding story is equally compelling, right? Vitalik Buterin and a group of visionaries laid out the foundation with a white paper in 2013. It was almost like they envisioned a whole new internet that is autonomous and self-executing.
Precisely. Ethereum enabled what many would call code is law by using smart contracts that automatically enforce agreements. And these contracts, written in Solidity, have powered innovations from decentralized finance to non fungible tokens.
It's revolutionary. But one thing I'm curious about, some argue that Ethereum, as a decentralized computer, has so many potential use cases that it might even outshine Bitcoin. Do you buy that perspective?
That's an interesting point, but I'd say they serve different roles. Bitcoin is primarily a store of value and a medium of exchange, whereas Ethereum is really about enabling a broader range of applications. In fact, many folks say they complement each other. It's like Bitcoin is
Right,
the
I see.
safe haven in turbulent markets, while Ethereum is the enabler of innovation in the crypto ecosystem.
Agreed. That's what makes the debate so rich. Speaking of differences, let's talk technicals. Bitcoin and Ethereum both are decentralized and use blockchains, but they differ in block time. Bitcoin's around 10 minutes compared to Ethereum's 15 seconds per block.
Yep, and that faster block time on Ethereum is crucial for running decentralized applications where speed matters. But, of course, it comes with its own trade offs like network congestion and higher fees during
Exactly.
peak usage.
And what about the way transactions are executed? I mean, Bitcoin transactions are simple monetary transfers with optional data, while Ethereum transactions can include executable code for those smart contracts.
Spot on. Bitcoin keeps it simple and secure, whereas Ethereum is like an entire programming environment built into a blockchain. It allows for writing self executing contracts, which opens up a world of use cases from lending and borrowing to digital art markets.
Yeah, that's the beauty of it. Now, both networks have scalability issues as they grow in popularity. Bitcoin handles roughly 7 transactions per second, and Ethereum does around 30. That's way behind traditional systems like Visa.
Very true, and each network has its strategies to combat these limitations. Bitcoin, for instance, is leveraging the Lightning Network, a layer 2 solution enabling off chain transactions to speed things up and drastically lower fees.
That's a smart workaround. Ethereum is also deploying multiple scaling solutions, right? I recall they've been working on sharding to split the network into shards and using sidechains as well.
Exactly. Sharding is aimed at parallelizing transaction processing across 64 shards, which could, in theory, increase throughput dramatically. And then there are layer 2 solutions, servers bundling transactions off chain to take the load off the main chain.
Right, that sounds promising. But here's something I've been pondering. Isn't it risky to rely on these layer 2 solutions? I mean, what's to say they won't introduce their own sets of security or centralization issues?
That's a fair critique. The reliance on off-chain solutions does indeed come with trade-offs, such as potentially weaker security guarantees compared to the main chain. However, many in the ecosystem believe the benefits, like massive scalability and reduced fees, are worth the
Yeah, it's a
risks.
balancing act for sure. Another interesting aspect is the issuance and token standards. Bitcoin's issuance is fixed, and its coin is raised through mining, while Ethereum's Ether can be further issued and even staked now. How would you compare those models?
Great point. Bitcoin's fixed supply at 21 million gives it a sort of deflationary appeal, reinforcing its reputation as digital gold. Ethereum, on the other hand, started with a scheduled issuance and is transitioning to a proof of stake model, which fundamentally alters how new Ether is minted. Now, users stake their assets to become validators, leading to lower
That's a
energy
significant
usage.
evolution indeed. And speaking of energy, Bitcoin's proof of work has raised concerns over high energy consumption. Ethereum's move to proof of stake is seen as a step towards a greener system. Do you think this could shift investor sentiment?
Absolutely. There's definitely a growing preference for energy efficient systems. Ethereum's shift to proof of stake, which dramatically reduces energy consumption compared to mining, could be seen as aligning with these sustainability goals. Meanwhile, Bitcoin's energy usage remains a talking point, though staunch supporters argue that its security is worth the cost.
It's like debating cost versus value. Interesting. And on top of that, we have tokenized versions of Bitcoin on Ethereum, which allow BTC holders to interact with decentralized finance and other dApps. Isn't that sort of a cross-pollination between the two networks?
Exactly, and it's a stellar example of how these networks, despite their differences, can actually complement each other. Tokenized Bitcoin on Ethereum enables BTC holders to participate in lending, borrowing, and other decentralized financial services without sacrificing their core holdings.
Right? It's a win-win setup. So if we sum it up, Bitcoin's role as a store of value and decentralized asset contrasts sharply with Ethereum's role as a versatile platform for decentralized applications and innovation.
Yep, that sums it up nicely. Bitcoin stands as a secure, albeit slower store of wealth with its robust proof of work foundation. Ethereum, meanwhile, offers a robust ecosystem for building innovative applications, though it faces challenges in scaling and evolving its consensus mechanism.
Exactly. One more thing. Some people argue that Bitcoin and Ethereum are competitors, but don't you feel like they're more synergistic in many portfolios?
I'd respectfully challenge that view. While there's a natural temptation to compare them head to head, they really serve distinct purposes. Bitcoin is often seen as the digital reserve asset, while Ethereum is the backbone of decentralized innovation. Investors often hold both
Yeah, that
to
makes
hedge
sense.
against different market dynamics.
That's a compelling take. And it explains why market capitalization, unique wallet addresses, and trading volumes often keep these two at the top of the crypto charts.
Absolutely, those metrics clearly illustrate their dominance. Bitcoin's market cap as a store of value and Ethereum's utility within its expansive, ever growing ecosystem are key indicators of their respective roles.
Indeed. And not to forget the wallet address distinctions. Bitcoin addresses starting with 1, 3, or BC1 versus Ethereum's always starting with 0x. These little details really highlight their underlying architectures.
Exactly. It's like comparing two distinct code bases. They operate differently and are optimized for divergent purposes. The specifics, like address formats and block times, can seem technical, but they're crucial in how users interact with each network.
Right, right. I think it's safe to say that while both have paved the way for blockchain technology, they're carving out unique niches. Bitcoin continues to embody the concept of digital scarcity, and Ethereum continuously pushes the envelope with programmable money and applications.
Absolutely. What's really exciting is watching how Ethereum's technological innovations like sharding and the shift to proof of stake will evolve over the coming years, and how Bitcoin will maintain its identity amid debates about energy and scalability.
It's really an evolving story. It sure is. And as both continue to mature, investors and developers alike are watching closely to see which innovations will disrupt the financial world next.
True that. The interplay between these platforms is dynamic. Imagine it like a carefully balanced ecosystem, where both Bitcoin's solidity and Ethereum's flexibility contribute to the broader future of decentralized finance.
Yeah, exactly. Well, I think that covers a lot of ground on the Bitcoin versus Ethereum discussion. It's been a really engaging deep dive into their technical differences, use cases, and the challenges ahead.
For sure, it's like watching two pioneers on different journeys, each pushing the boundaries of what's possible in crypto. Thanks for the stimulating exchange. It's been a pleasure unpacking these details with
Yep,
you.
absolutely. Looking forward to our next conversation on the evolving landscape of blockchain technology. Until next time.